So today I'm really excited because myself and 3 other personal finance YouTubers in the UK have come together for International Women's Day. And so today's discussion is all about women and investing. So this is a really important topic to my heart because I passionately believe in women taking up space in the investing world. So you're in for a treat. I hope you enjoy the discussion we have today and let me know below in the comments what you thought of it. Okay, so guys, I'm really excited for today because I have 3 amazing women who are joining me to talk about women and investing. So for International Women's Day, we are covering a variety of topics. And so today we're going to focus on investing. And this is something that we all know is important. It's dear to our hearts. And so we're really excited to be having this discussion today. And it's going to be good. So stay tuned for the conversation. So first of all, I'll let you guys do a brief introduction of yourselves and then we'll get straight into the conversation.
Oh, hi guys. I'm Tolu. I'm a money coach and an online content creator, online. Oh gosh, finance online content creator. So I make content videos basically all around personal finance, budgeting, and frugal living.
Hi guys, my name is Veronia and I don't know if I'd call myself a YouTuber, but I basically produce videos on YouTube and I'm very similar. I talk about a lot of things to do with money and careers. So my main focus is a lot of budgeting, saving and also investing as well.
And hi, I'm Yvonne Hudima. I'm also an online content creator. I like to market myself as just this mum on the internet on a journey to financial freedom. And I'm just sharing all my tips and tricks that I learned across my journey in the hopes that it will help at least one person.
Thank you. So these are all amazing ladies. I am obviously subscribed to all their channels. I watch their videos. So if you're not already subscribed to their channel, if you don't know about them, definitely go and check them out. Their channels will be linked below in the description. So feel free to do that after you've watched this video. So I'm going to first of all start with a question and I'm going to set the scene for all of us in terms of where we currently are with investing. So we're all at different stages, and that's why this conversation is going to be a really good one because we have a variety of perspectives. But if we just want to set the scene, I can start. So I technically started investing back in 2017. But my first investment was quite risky because it was all in cryptocurrency, but I believed it was going to boom. And I really have started taking it even more seriously in the past year or two. So I would say about maybe 4 to 5 years of investing.
Oh, I have I'm very new to my investing journey. So I literally started investing in December even 2020. So I'm definitely a newbie investor. And at the moment, I'm currently just investing in index funds and a few individual shares. So I use Vanguard for the index funds and trading 212 and free trade for individual shares in companies that I'm interested in. So yeah, still very much new to the journey and learning so much along the way. So channels like yours are very helpful. Also yours, Veronia, as well. I've learned a lot about investing from them. So yeah, that's where I am currently.
Yeah, so I've been investing for a few months, I think since September. Before that, I was basically having to pay off my debt and save up for a load of different stuff. So I currently invest in the stock market, so very similar in terms of investing in ETFs mainly, but also some individual stocks as well. But I'm also saving to invest in property as well, which I'm hoping to do hopefully by the end of this year or early next year.
Yeah, and I would probably say I am probably the newbie of all of us in the sense that when it comes especially to stocks and shares, I very much started my journey last year when we went into lockdown and I just basically wanted to get my knowledge up. I tried a few apps, so I use Trading 212, Free Trade, and I basically for the most part been a very passive investor. So I've mainly just gone for ETFs and what seems to be safe for me, but I'm very much interested in basically creating my investment portfolio.
Amazing. It's really great to hear that we've all started our investment journeys and we're not in the majority in the UK because still the majority of women aren't investing in the UK, which we need to change, and we need to work towards changing that. But I'm really glad that we're all now on this investing journey. So next, I want to ask, why do we think, from your personal opinion and from your own personal experiences, why do you think as women we are potentially more hesitant to invest?
I think for me, there are kind of two things. I think fear is a major one, where you some people, if you don't really understand it, then you're probably less likely to think about doing it. So and I think I had that at first as well, because I was quite scared to start investing. And you get things like, oh, what if I lose all my money? But then there's also sometimes where you have to remember, but when you're going to McDonald's and you're spending £20 a week, you've lost money there. So so that's kind of how I've sort of seen it. But then also I think at the same time, when you don't really see role models doing that as well, because even if you go on YouTube and you type in how to start investing, for example, in the stock market, you do see a lot of men doing it. And I think if women don't see people like them investing, they're probably less likely to think that they can, and think that maybe it's just for specific people that can start investing. And then obviously if you're using all of these terms that you don't understand, you're probably just not going to think about it.
Yeah, I think also it's just that it seems too complicated. I think that's what stopped me from doing it for so long, is the fact that I just thought I couldn't invest. Like, where would I even begin? So, like, touching on what you just mentioned, Veronia, in terms of the language and stuff like that, I didn't even understand what they were talking about when I was watching these YouTube videos. So to me, I just thought there's no point even trying to do this. And also the risk side of it as well, because I didn't understand investing and the fact that there were so many different types of investing that you could do. To me, when I used to think of investing, I just thought it was high risk. It's what's that film? The Wolf of Wall Street. That's what I thought of when I thought of investing, and I was like, that's not me. So I just never thought it was something that was accessible to normal people like myself. So I think, yeah, definitely a lack of knowledge and a bit of a fear factor as well is kind of what kind of prevents women from doing it. And because, yeah, literally, bro, you hit the nail on the head. The fact that we don't have these conversations and you don't really see people doing it. So just, to me, growing up, investing, I didn't even know what investing was. And when I did know about it, I just thought it was for a certain demographic of people. And I didn't think it was for people like myself, because I thought you needed to have lots and lots and lots of money to even begin investing. And I was like, I don't even have money as it is. So how am I going to now find money to invest? So that's kind of what prevented me from doing it for so long.
Yeah, I totally second or third exactly what has been said. So I think for me, the first thing was just like thinking that you needed like a vast amount of cash to basically start investing, especially when it came to, well, definitely for property, but when it came to stocks and shares, you think, I need 10, 20K, and you're like, well, 20K could go a long way in my life right now. I don't have 20K to throw it away. And especially when it's combined with like the risk factor, where you're like, could you afford right now to lose 20K? First of all, I haven't even got that. And then second of all, can you afford to lose that? And then I think for me personally, it was just around understanding and the education side of it. Because for me, for a long time, I thought investing in shares was trading. So I was like, it's too risky. I'm not doing all of that. I don't know. I don't understand. People are showing me charts that I just don't get it. So for a lot of people, and I think even when I've had conversations with other women, it's the same thing. It's like, I don't have disposable cash to basically put away, and thinking that it's trading. Yeah.
Yeah, I think those are all really great points. And, as you said, growing up, I'm realizing now I didn't have these conversations. So there was no one around me that was talking about investing and, opening up an account and putting some money inside shares. That just wasn't something that was talked about. And really, the only reason why I learned about investing was because I just done lots of research. I don't even know how I got to this stage, but I developed an interest maybe when I first learned about Bitcoin, which of course I want to make very clear, I'm not recommending anybody and to invest in Bitcoin per se if that's not what you want to do. And today everything we're talking about is not financial advice. We need to make that clear as well. We're just sharing our own personal experiences, and it's not financial advice at all. But I started off with a more risky approach, and I kept it to myself, really, apart from my mother, who I asked for some money and she didn't give it to me to invest in Bitcoin. But there was no one around me that I could talk to about it, about any form of investing. And as you said, it's something that I thought you had to have a couple of £1,000 to do. I thought the entry point was quite high. And so, I did not think that that was accessible to me. But I will say in recent years, and this is why it's so important that we talk about it, things have changed. So, you know, with this new wave of apps that we're able to download, such as Trade 212 and Free Trade, all of that wasn't there before. And so originally investing really was to do with like paper certificates. Back in the day, it was paper certificates that would show, you know, you've got shares in a company or bonds or whatever it is. Now we can literally go online and put in as little as £1 in Trading 212 and start investing in any company we want. So there's even less of an excuse now, and it's less scary, I guess, to get started because it is accessible and they've made it more accessible for everybody. So yeah, thank you, lady, for sharing your points. I think it's really important to see kind of where we're all starting from and show that we all had these fears before we started investing. So the next question is, why would you say it's important to invest as a woman or just in general?
So I always tend to say that you can't really save your way to wealth. As much as you try to save as much money as you can, at the end of the day, when you think about something like inflation, which is basically when the price of goods and things go up, but if your money is kind of staying the same, and if your money is in a bank account, you're going to end up losing money over time. So to be able to keep up with that, you need to invest in assets that are probably going to increase in value as well. So I think when it comes to things like retirement and financial independence, it's going to be important to invest. So that's really where I then try to, and I think it's a kind of shift in mindset in terms of realizing that it is important to do it, and it doesn't have to be complicated either. And again, as I sort of mentioned before, even though you may sort of think, well, you know, what happens if I do lose money? Because obviously investing does have risks. You're not always guaranteed to make money. But that's sort of why I said, you know, if you're able to spend money at a restaurant, for example, which you're probably, and you end up losing money because it's going to come down out of you, you know, in some point. So if you're able to do that and think of it as well, and think, actually, even if I lost the money, you know, if I'm buying an Apple product, for example, if I invested in Apple, you know, is that something where I, you know, even if I lost that money, actually, because it's quite disposable. And I think it's also important to realize you don't need to invest your whole life savings as well when it comes to investing. I think for me, I try to focus on, is this something where potentially if I lost the money, would I still be okay financially? And if the answer is yes, then I'm sort of happy to take the risk.
Yeah, that's really important. And I just want to touch on that because this is it with investing. You really should only be investing what you can afford to lose. And as time goes on, the reality is you're going to start to see it's getting bigger and it's compounding, and you're not really in reality going to want to lose that. But that's not what I'm saying. But you do need to get yourself in a position where whatever you invest per month, as you said, Veronia, you can still pay your bills, you can still eat, you can still keep the roof over your head. It should be a bit of extra money that if you didn't have it and you were to lose it, then you would still be fine. You could still survive. And so it's really important.
And I kind of think if it was to a point, if I can use that money rather than going to restaurants 4 times a week, I go 3 times a week and invest the rest of that money, then, you know, is that a bit better? So I think it's again, that's when I'm talking about disposable income, it doesn't have to be a lot as well when you get started.
No, 100%. Yeah, no, totally agree with what you both have said in terms of investing. I think it's so important to do it because you'll get to the wealth a lot quicker if you start investing, because yes, you can keep saving, and that's kind of what we was taught, or I was taught at least growing up. You need to save, and that's good. You do need to save, but if you actually want to start building some kind of wealth for your future, why don't you get that money to start making you more money? Because when you invest, that money has the opportunity to grow. Whereas if you just keep saving, it's not going to grow at the same rate as it would if it was invested. Like you said, obviously there's risk involved, and your investments might go down, but then that's why you need to look at what you're actually investing in the first place, because there are some investments that over a long-term period of time, yes, it will go up and down, but generally speaking, 10-15 years down the line, your money would have gone up in value at a higher rate than it would have if you were just saving that money in the bank. Especially right now, savings in the bank, the interest is just, it's rude. It's actually rude. So it's like you're better off just putting the money under your bed if you're not going to invest it. The money's not great. Now, I wouldn't suggest anyone do that, to be fair. Don't do that. but yeah, no, I think investing is definitely important. I just wish I had learnt about it a lot sooner on in life, because yeah, all that money that I was wasting, like Veronia was saying, out to eat, travel, like I spent a lot of money, and it's because I didn't have nothing to do with that money really. So if I actually knew about investing, I knew that, you know, if I put this £10 away, I could help, it could grow to more money without me having to actively work for that money. Then that's a more compelling proposition than just keep your money in your savings account for this rainy day. Although it is important to have that rainy day fund too, but at the same time, invest for your future. 100%. Yeah, I think it's really important.
Yeah, so for me, the reason why I really got into investing was actually my grandparents live in Kenya, and I always try and make sure that every other year I'll go visit them and make sure they're okay. And my grandma is like the most fabulous woman I have ever met in my entire life, and she's just living her best life. She's completely retired. She's been retired for like 25, 30 years now, and she's just living her best life. And I was like, but how are you maintaining this life? She was taking me to spas and stuff, and I was like, shouldn't it be me taking you because I'm the one who's working? And it was only when she sat me down and she was like, look, you have a kid now and you have to think about your money. It's not just about enjoying and living your best life, YOLO this, YOLO that. No, you actually have to think about your future. And she can only do these things because she had started investing early. And so it's because of that that she sat me down, and I was like, well, I don't have 10, 20K. And she was like, that's a misconception. I'm sure. She's like, I don't understand the technology, but I'm sure it's a lot easier now and the barriers to entry are much lower. But you can start doing this. So then, mixed with what Veronia and Tola were saying, I started looking at all the subscriptions that I had signed up to, that I was paying for throughout the year. And I thought, you know what, instead of basically paying for that subscription, let me at least try, because either way it's money that's being wasted anyway. I'm not using the subscription, so I might as well try it out. If I don't make money in the stock market, it's money that would have gone, and at least I've tried. And so that's what got me on my journey, and I'm still learning a lot, but definitely understanding that actually it's not just about thinking about your money now, but it's also thinking about in 30, 40 years, I want to be sitting nice and tight like my grandma, just living my best life, knowing that I'm taken care of, my son is taken care of. And one way to do that is through investing and making your money work for you.
Yeah, and that just reminds me of the book, The Richest Man in Babylon. Like, that's where I actually learned about investing from. And that book was just an eye-opener, because when he was talking about the fact that basically everyone else gets your money, why are you not getting any of that money when you work so hard for it? So pay yourself a tenth first. So you keep one coin and you give away the 9 coins, as opposed to everybody enjoys and you don't enjoy any of it. But if you just keep that one coin and then the next month you get paid, then you have 2 coins, then 3 coins. But then imagine if you now take those coins and actually get those coins to make you more money, the money will grow a lot quicker, and that's how you build wealth. And I was like, yeah, that is how you build wealth. Why did I think of that? So it's like, yeah, no, that book's a really good book. That's why I thought I'll mention it here in case anyone doesn't know about it. You should definitely check it out, because yeah, really
I second that book. I think that book is incredible. I love it. It's obviously written in quite oldie English, but you get the points, and it makes you think, and you think, wow, yeah, that's such a good point. And it shows that it's an age-old principle.
Exactly.
Investing. This has been going on since biblical times.
Since the beginning of time.
You know, we're acting like it's new, but it's not. It's not new, and we all need to be involved in it. And this is it. It's old principles. And as you said, Veronia, it's very hard to save your way to wealth. I think that's such a good point. I don't think I've ever heard it put like that, but it is so true. It's very difficult to do that. And so investing is so important. And, you know, you may hear people say, the earlier you start, the better. And they're not joking when they say that, because the effect of compounding really starts to crank up as time goes on. So as you just said, Tolu, when the coins start making you more coins, it just starts to compound and compound and compound. If you've ever used a compound interest calculator, they've got one, the compound interest site, I think it's called, and you start to see how the interest builds up over time. So the first 5 years, it's doing okay, but then in the next 5 years, you think, whoa, that's gone right up. And then the next 5 years, you're thinking, what? How would that be possible? And that is the beauty of investing. The quicker you start, even if it's £10 a month or £50 a month, whatever it is, the better you will be in the long run. And, you know, I just want to make this point that if you have a pension, do realize that they're investing your money.
Yes.
The reason why it's so big at the end and people are able to live for many years and get that income is because pensions are investing your money. So your money's already being invested if you have a pension.
Yeah.
So, you know, just keep that in mind. I think that's an important point as well. Okay, and so I think someone briefly spoke about this before, but can we talk quickly about the difference between trading and investing?
Yeah, it's an interesting one. In terms of my perspective, when I'm thinking about trading, I think a lot of people sort of kind of do that day to day, and a lot of people kind of have that as their job. So they might be buying some shares, you know, early in the morning, and they will be trading during the day or during that week. Whereas with investing, it's very much a long-term horizon, well, at least for me. So with investing, I will buy shares today, but I'm not looking to sell those shares within at least the next 5 to 10 years, to be honest. So I think that's the difference. And I think, yes, with trading, it's probably considered a bit more risky because you can end up losing money, especially if you've bought at a higher price and then you end up selling at a lower price. But that's where it's key with investing, because even though you may have bought shares at a certain price, let's say you bought a company for £10 a share, even if it went down to £8 maybe within the next week or the next couple of weeks, if you don't sell those shares, you hang on to them and they recover over the next 10 years, you would have still made money. You wouldn't have lost money because you wouldn't have actually sold those shares.
Yeah, I think literally it's the difference to me is basically trading is time in the market, whereas trading as in the way we do it, investing, is more time in the market. So the more time you have over time, it will kind of perform better. Whereas if you're just time in the market, it's like, oh, quick deal here, let me quickly try. It's a lot riskier. It's a lot riskier, basically. Yeah, investing, I think, is, depending on the investing you do anyway, I think it's less risky.
Yeah, I totally agree. I don't think there's anything more I can add on that one. Yeah.
No, it's so true. And I think, you know, with day trading, or okay, I said day trading, it could be swing trading, it could be week trading, it could be whatever it is. With trading in general, the goal is to make a quick buck or a quick pound. So, you know, it's a very different mindset. As you said, Tolu, you are trying to time the market. So you're trying to see, okay, you're reading charts and you think, okay, this looks like a good point to get in. I'm going to get in and then I'm going to sell when it hits that. And some people are doing this within an hour, within 30 minutes, within a day, within a week. And they're trying to gauge what's going on. But, you know, this week, I don't know if you're familiar with gold, but if you're familiar with gold or lots of other types of stocks and shares this week, they've plummeted. And lots of day traders and traders have lost a lot of money because unfortunately they were not able to predict that was happening. So they put all their money in, was waiting for it to maybe go up if it was a buy order, or wait for it to go down if it was a sell order, and it didn't happen the way they expected it to, and they've lost a lot of money. Whereas, as you said, when you're investing, if that's gone down, that's absolutely irrelevant because I'm not going to sell it, and it's not until you actually sell or realize that profit or that loss that you need to worry. And so it really is the risk level between trading and investing is quite vast. And, you know, I think you do have to say that investing, your capital is at risk because it is, but if you take a long-term approach, at some point it will hopefully go higher than what you bought it for. And so, you know, if you're taking a 5 or 10 year approach, within five or 10 years, at some point it's quite likely that would have gone a bit higher than what you bought it for. But of course, always do your own due diligence.
100%.
So what would you say are some steps to take to start investing for someone who's at the very beginning and they're thinking, I think I want to do this? What would you recommend? What are some things that you may have done?
I'd say invest in the knowledge first. So before you start putting your money anywhere, do your research, read books, listen to podcasts, watch YouTube videos. yeah, you can even do courses. Be careful with the courses, because some courses, they're not all equal kind of thing. But yeah, just definitely do your research first before investing. Yeah, the first investment and the biggest investment, I say, should be in yourself and in your learning, which is why I've been researching for 2-3 years about investing, and I only just started in December last year, and I'm still learning, because there's a lot to learn kind of thing. So I think that's the first thing I would definitely say would be the first step.
Yeah, I definitely agree with that. I would also say first get your financial house in order before you start investing as well. So for example, if you have high interest debt like credit card debt, I personally would not be investing yet, because the returns that you will probably get from investing might not be as much, might not be as much compared to your credit card interest. Because for example, credit card interest, they can be charging you 15-18%, and if you're only getting a 10% return, which is still relatively quite high in the stock market, then it doesn't really match up. So I would definitely try to get your financial house in order. Just make sure you don't maybe have any high interest debt. Personally, for me, I would rather have an emergency fund first before, and that's something that I did before I started investing. Because, and the reason why is because if, for example, you invest all of your money, and if the market crashes and let's say you lose your job and you need money, if you have invested all of that, you'll end up selling at a loss. So for me, I prefer to just have my emergency fund first, and then you can start investing, because again, it'll be disposable income.
Yeah, absolutely. And I think also, before you even think about it, just have a look on YouTube. There's so many people out there talking about the principles of investing, showing you how they're investing and how the returns that they're getting back from it. So I totally agree. You definitely need to make sure your financial health is definitely on point, and make sure you get your knowledge up to base, but also change your mindset. Like, investing is for literally everybody. And I think that can be the biggest thing, is that you can get all, you can have all the knowledge in the world, but if you don't actually apply that knowledge, then there's no point in just basically getting a lot of information. So I think just completely change your mindset and find out what it is that you can actually do, and just start from there.
Yeah, I agree and echo everything you've all said. And the beauty of the internet, obviously it has its downsides, but the beauty of the internet is that you can get a lot of information for free. So, you know, you can do a lot of research on your own for free in the comfort of your home in regards to investing. And so, you know, you don't have to start out right away. Once you start, you can just take your time, do your research, speak to people who maybe have invested in the past, and, you know, once you get to a comfortable stage, start investing. But I agree with Yvonne. What can happen sometimes is this analysis paralysis, where you're just so scared, and you're doing so much research that you never actually do anything, and before you know it, that's been 5 years of research and you've not invested. And within that 5 years, you could have put maybe £100 into investments, and it would have been, I don't know, £150 now, or whatever it may be. You would have seen some progress in that time. So set yourself maybe a time limit, but do your research. And there's lots of free resources. You don't have to get a financial advisor. I don't know about any of you, but I don't have a financial advisor.
No.
Okay, and so that goes to show that we've all started investing without a financial advisor, because you can do your own research. I was going to say something, Yvonne.
No, I was just going to plug your channel, because I learned so much from you, Dee.
Yeah, that's true.
Videos.
Thank you. No, that's thanks. Thank you. I appreciate that. Yeah, I'm definitely all about, as you said, this representation. There's a lack, and women talking about investing, there's a serious lack. Black women talking about investing, I mean,
I don't think I found any other besides you guys.
It's quite rare.
There's a few, yeah.
Quite rare.
Particularly in the UK as well.
And in the
UK,
UK,
exactly.
The US, but the UK, yeah.
Honestly, it is so rare. And you're right, it does make you feel like, oh, am I doing something that I shouldn't be? But no, you should be doing it.
Yeah.
And, you know, it's really important that, like, for me, it's really important that I show my face as someone who's investing, to show an everyday person I'm not rich. I'm not, you know what I mean? And I'm still able to figure it out and do it and everything else. And so that representation is really important as women, as Black women. you know, as women in the UK, because as you said, Veronia, in the US is a whole different ballgame. They've got lots of content. So yeah, and apps and resources. So any apps, I know Tolu, you spoke about the apps that you use at the beginning.
Yeah, Trading 212 and Free Trade. Those are the ones that I've started. Is Trading 212 lets you do fake investing, but it lets you do dummy accounts before you actually invest real money. So that's a good opportunity for you to just kind of test the waters, see what you like, see what works before you actually put your real money in there. So that's a good app, I think, to get started with. Resources channel wise, I think the Humble Penny, he's got a lot of good videos on investing, and so does Mama Furfur. So Jennifer, she's got lots of great investing videos too. And there's a few more that I've seen pop up recently. So even if you just type in investing for beginners UK, you see Veronia's face pop up as well. Like there's so many people now that are actually sharing those videos in the UK. So the information is out there. You just need to proactively go and find it.
Yeah, no, I would say the same. And Google will be your best friend as well. I think as a lot of beginners, I would say maybe start researching things like the platform that you might want to use, so where you might want to invest it. So if it's like somewhere like Trading 212 or Free Trade, there's also platforms like Vanguard as well, which is very, very popular, and especially for new beginners. And actually the Vanguard website have a lot of information to help you as well to choose certain funds. So if you are a complete beginner, then maybe start with that. Maybe start thinking about what you might want to invest in. Obviously, you've got the different asset classes. A lot of people get started in the stock market because you don't need to have a lot of money compared to property. So if that is something that you want to learn about and you're a complete beginner, maybe start learning about maybe, you know, index funds or ETFs, because that's probably going to be fairly straightforward, just because you're just going to be tracking the market. And then once you build that confidence, then you can maybe start thinking about individual stocks. But with tracking the market, it's very simple. Once you've chosen your fund, you can just set and forget and leave your money there and just invest it. And then from there, you'll start to build your confidence, so you can think about, you know, other asset classes maybe in the future.
Yeah, I totally agree with everything that's been said, but I think there's a small group of people who think that, you know, you just don't want to be completely forward with actually being really reactive with how you invest. So I think for those type of people, it doesn't mean that you actually have to know exactly how to read charts or anything like that. There are actually platforms out there where you can get somebody who will invest on your behalf for a small fee. And so if that's the case where you think that, you know what, I don't want to do any of this, I just want to give a certain amount every month and somebody does it for me and I get a report at the end, that is also a possibility as well. So it shouldn't stop you just because you think that you have to be so active in it. But it's completely dependent on your personality type. But you should definitely get into it and find out which way suits best for you.
100%.
Yeah, that's such a good point. They make it even more easy. You can, as you said, you can have, I think like Moneybox does that, and they make it really easy in terms of investing. It's more expensive than some other platforms, but if that's what you want the ease, the option's there. For me, I use Vanguard mainly, and so most of my money goes to index funds and ETFs. That is, for me, the safest method, and it's according to my appetite for risk. And so that's where most of my money goes. And then I also invest in individual shares in Trading 212, eToro. And then, as I said at the beginning, the first ever investment was in cryptocurrency. And so I still have that sitting there in Coinbase. I withdrew all of the initial capital I put in. So now my Coinbase account is just the profit working for me. So it's a really nice place to be in.
So I really hope that you enjoyed the discussion on women and investing. As I said, they are three amazing women also in the UK talking about personal finance. So their channels are below in the description. I appreciate you taking the time to watch this video today, and let's make this International Women's Day week next month a time to remember for us women when it comes to investing.